There's a smart new website that will change the way you invest using social media.
LikeFolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of LikeFolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data, analyzed by legendary traders. The LikeFolio broadcast starts right now.
We're coming up on home improvement season. And so you're starting to see all these ads for Home Depot, Lowe's, those companies. I was kind of excited that this is what Landon said some LikeFolio data might be interesting on when it was Lowe's and Home Depot, because I've been seeing these commercials for Lowe's where you can go into the app. No, you can go into their website and you can set up your own lawn care schedule for the summer, for the whole season.
That's a pretty good idea.
Yeah, it's pretty cool. You just go on there, you say, they ask you what your yard looks like now, and it gives you like 4 choices. You press that choice. Then it says, what do you want your yard to look like? And it gives you 4 choices again, where it's, are you after perfection or what's the deal here? And then it asks you your zip code and maybe something else. And then it just prints it. Then it just has this thing. The results are, all right, in March, you need to spread crabgrass.
Can you like prepay for that stuff and they just deliver it? You know, March 1st, here's your whatever stuff, and April 15th, here's your whatever stuff.
No, it wasn't there, but they do.
That's the next step.
You do hit the button to have them email you reminders when it's time to get the stuff.
That's cool.
I'm sure they're trying to get you into the store. Is there?
Definitely.
That's true.
It's going to work on me. I immediately signed up for it and canceled my True Green subscription.
Really?
Yeah, because True Green wasn't doing it for me. Their yard wasn't looking good, so I was like,
they just come out and put that little flag in your yard and drive away.
That's what I think they
It's just
do.
a big old truck full of chemicals riding around town.
I do have a home improvement joke that you just made me think of. This one is credit of Brendan Powers.
Yeah.
This one's one of my favorites. He said, to all the wives out there, if you ask us to do something, we'll get to it. You don't need to remind us every 6 months. Which is great.
That's pretty good. That's pretty good. So Home Depot versus Lowe's. I was looking at the stock charts of these two, and it's amazing how similar they are in terms of
You could barely tell them
Yeah,
apart.
almost mirror images.
one goes up, one goes down. One goes up, the other one goes up, one goes down, the other one goes down. And it's just over the course of the last year that you've sort of seen a gap build between the two. I looked at it, looked like most of that gap last year built where Home Depot has actually outperformed Lowe's by like 15% over the last year. And most of that gap occurred in that summer home improvement season. So we're coming up on that. And so now is a fantastic time to look at what consumer purchase behavior, consumer sentiment and shifts and all that is going on between the two companies, because otherwise they're going to be lockstep.
Yeah.
And so let's see which one of them looks like the winner between the two, and then maybe we can come up with some trading ideas. So,
Sure.
Landon, what are you seeing in the LikeFolio analysis of consumer sentiment data and social data?
Sure. So when I look at the LikeFolio data on Home Depot, it's not real impressive. It's sort of sideways. We're talking about number of brand mentions, consumer sentiment, and purchase intent. In fact, purchase intent is actually sliding off a little bit lately. And so Home Depot is sort of flat / going down a little bit.
Okay.
But then when we look at Lowe's, it's actually has been pretty flat, but lately it's starting to pick up a little bit. So it's kind of the opposite story. I mean, they've been very similar over a long period of time, but then lately, last month or two, they're starting to move away from each other. And so both brand mentions and purchase intent for Lowe's have been moving up over the last 4 to 8 weeks.
Oh, cool. So and you would expect companies like this. I mean, this isn't like a new gadget's coming out and people are going to start talking about it.
They're selling the same stuff.
Home Depot and Lowe's, you would expect those to be fairly steady in terms of how often and how enthusiastic consumers are about them, unless something happens. So now seeing one of them, in this case Lowe's, start to track up while the other one slides slightly or stays flat is an indication for us that
it is.
It's an interesting observation.
Yeah.
They're both fairly range bound in their purchase intent, but Lowe's is making a probably 2-year high on purchase intent. That's not saying it's like jumping through the ceiling, right? Because it's so range bound. It's just kind of coming up out of that range.
Just trickling higher.
Exactly. Whereas Home Depot's doing the opposite. It's making a 2-year low on purchase intent. Again, it's not tanking and falling through the floor, but it is just kind of going a little bit lower than the range has been. So that divergence between the two companies, along with the fact that their stock charts are so similar, sets up what I think is a pretty cool pair trade.
Yeah, that's what I was going to get into because
Absolutely.
that seems like the way to play this. It's a nice kind of market neutral, economy neutral approach because
Right.
economic headwinds face one, it obviously affects the other.
Sure.
They have the same basic product line. They have the same consumer, their customers the same. So, they're going to be affected by the economy, good or bad, in the same way. So which one of them wins? And now we can just pair one, in this case, Lowe's long with Home Depot short, sort of have a just totally market neutral, even home improvement sector neutral trade, but just betting on one company to outperform the other, which I think is always fun and is a great use of LikeFolio data.
Absolutely. I'm thinking about it, and I go to both Lowe's and Home Depot pretty frequently, but I go to Lowe's way more than I go to Home Depot because it's what comes to mind is Costco versus Sam's. I go to Costco and I feel like it's like a luxury wholesale place. Everything's really organized, clean.
Right.
People are really nice. And then I go to Sam's and I feel like it's a downgrade as far as the overall experience. It's still great products and stuff, but I just feel like the experience is a bit of a downgrade. That's kind of the same way I feel about Lowe's versus Home Depot personally in this particular area. I feel like Lowe's is a more upgraded version.
Yeah, I agree.
Same products really, but it just feels cleaner, feels nicer. More people are there that you can ask to help or ask for help because God knows how hard it is to find the right bolt.
Right.
Which
I feel
aisle
like if you're in the middle of a project and your hands are dirty and you're a little sweaty, that's when you go to Home Depot. And if you're thinking about how you want to get the tile for your backsplash in your kitchen and you're going from work, that's when you go to Lowe's. It's just kind of what it feels like.
That's a good way to put it. And it also feels like if you're going to buy a big ticket item, you go to both.
Sure.
Because you want to see the different, if you're going to go buy a $2,000 refrigerator, let's go see what they have, what that looks like at Lowe's. They have a little bit different brands than Home Depot might have, or they have a little different sales, cycles.
Knowledge base and different display.
Let's hear what two different people say about it, that sort of thing. But I agree. I think if you rewind, 8-10 years, Target, Walmart is kind of the same comparison as Lowe's, Home Depot.
Sure.
So that's
so. I think I've been subconsciously going to Home Depot when I'm grimy.
Right.
Now that I think about it, and subconsciously going to Lowe's when I'm cleaned up. That's a great. That's so true.
All right. So how are we going to trade it? Because I know, the easiest way is just to pair trade, right? So you just put an equal amount of dollars into both. You don't want to just do one share because these are priced differently. You want the percentage move to be what matters to you.
That's important. So
it's about 2-to-1 ratio on shares, right?
Roughly, yeah. So if you're putting 24,000 in capital in Lowe's, you're going to want to buy. If you buy 24,000 worth of Lowe's, you're going to want to short 24,000 worth of Home Depot.
Right. But if people don't have that kind of buying power, that's what options are for. So what would be a good options pair trade for this?
So when I was looking at the options opportunities, I noticed two things. Home Depot is $130 stock roughly, and the strike increments are 5 wide. So you have to do 5-point wide spread. So they're 2.5 wide on Lowe's, which is $70 stock. And
that's perfect because it's half the price, half the spread.
Yeah, or if you want to keep it simple, you can just do 5 wide on both and have the same credit situation. So what I looked at is selling the 135, 140 May call spread in Home Depot, which is a bearish strategy there. And I looked at what were the strikes. I believe it was 65, 70, but let me just double check that. On Home Depot, it was, on Lowe's.
So Lowe's, you're trying to find a bullish position.
Yeah, it was 75, 70. So sold the 75 puts, bought the 70 puts in May, $1.50 credit, and also in May in Home Depot, sold the 135 calls, bought the 140 calls, also for $1.50 credit. So same credit, same strike width, same probabilities of success on both spreads. One's bullish, one's bearish. Really ties into this data discrepancy quite well, I think.
It does. The only thing that bothers me about it is I think that just from what I've seen, just from looking at the way the two stocks move, they're kind of slow. So may not give us enough time.
I strongly prefer just a pure stock play here.
Yeah.
Purely buying Lowe's, shorting Home Depot, which I normally don't.
Right.
But with portfolio margin, they'll offset. With standard margin, you can just use, the amount of capital that you're comfortable using. It's such a slow moving situation. We don't know how long it's going to take for this data to pan out. And even if it does go against you for a little while, it's not going to kill you. They move so slow, you're going to be fine.
Yeah.
So if people do get in, let's say that someone's got a lot of money or they have portfolio margin and they want to go long and short. At what point would you take profits when they're how far apart?
That's a great question. I mean, you just kind of have to
revisit.
You just kind of have to revisit. Generally, I look for a specific return on buying power effect. So, let's say 10% in this case.
Okay. 10% of the total buying power.
Correct.
Combine them both.
Correct.
Yeah, I think that makes sense. I mean, Home Depot's outperformed Lowe's by 15% over the last year. And so I think if you saw that gap close to nothing, that would...
If they tied it up.
Yeah, if they tied it up.
I like that.
Yeah, you'd be good to go.
Yeah, and I think that's a pretty conservative a pretty conservative profit target, yet it would make you happy.
Yeah, it would make me really happy. Especially when I have no true economic risk.
I actually really like this trade.
Yeah, me too.
You like the stocks, not the options.
I like just the pure stock play.
Yeah, the options, I mean, I get it, but yeah, putting that time duration limit on it just makes it feel like you're forcing it. Whereas if you just do the stocks, you got time.
Yeah, plus May is your only option right now because Lowe's doesn't have June options and Home Depot does, so you can't really do the June.
Gotcha.
I mean, you could go all the way out to August, I think, but I don't really want to go all the way out to August.
Yeah, I think the only other thing to keep in mind here is they both pay a dividend. So if you're short, you're going to be paying that dividend. I think on Home Depot, it's about a 2% dividend, whereas on Lowe's, it's a 1.5% dividend. So on the pair trade, you're going to be losing a little bit on dividend
That's
action.
a good point.
So it's just good to have in mind.
Another important thing is they both have the exact same beta. It's like 1.15 on both of them. So that's perfect for a pair trade situation.
Actually, that's a great point. So if they did have different betas, then you wouldn't necessarily want to put, you mentioned earlier, 24,000.
Mm-hmm.
If you don't want to necessarily put the same amount in them if they have different betas, right? You would want to do a beta weighting.
You can, if you want to get really intense with it, you could do a beta weighted situation, but I think it's fine to do the same buying power effect in both, unless it's like a
big difference,
big
like
discrepancy.
1 versus 2.
Yeah. Then,
But we knew that by looking
Yeah.
at, I mean, you could eyeball that looking at the chart.
Exactly.
Just for those
Exactly.
people listening that may, maybe doing a different pair trade,
Right.
than like maybe a GM versus Tesla or
Sure.
something like that.
Sure.
That's going to be a different situation. You want to look at the beta weighting before you decide how much to put in each stock.
yeah, this is a really clean play. I like this.
Cool.
Yeah, me too. I think we've got a couple notes just if people are looking for additional activities in sort of this retail consumer space. I think it was Cabela's and Dick's Sporting Goods, as well as Best Buy, all kind of looking negative from a LikeFolio purchase intent perspective. So we're not going to dive into what we should be doing on those trades. That's just a little teaser to put out there. If you got questions on them, hit us up on email or Twitter or whatever. And we'll be happy to get into it with you. But, the sort of overall view of the retail consumer sector, I'd say is a little bit bearish looking based on the data that we looked through. But Lowe's kind of
Lowe's was kind of the exception.
Lowe's
Yeah.
kind of a standout there. So, even if you don't want to pair it up, it might be an opportunity to just go ahead and get in on one that's bucking the trend.
Yeah, that's a great point. I mean, you could just go position bullish and Lowe's. You don't even have to Put Home Depot on
Why
the
not?
mix.
Especially on a dip. Especially if the market gives you a dip.
Absolutely.
All right, cool. So good show. Hit us up. Make sure you're subscribed to LikeFolio in whatever podcast software you use. Just if you have iTunes, just go in there and search for LikeFolio. Subscribe so that you don't miss any episodes, and also get the LikeFolio app where we put out these trade ideas and a little bit more, and you'll get the notifications, and life will be good. So thanks for listening. We will catch y'all later.